Good afternoon, ladies and gentlemen. My name is Alexia Tasouli. I'm a diplomatic correspondent. And it is an honor for me today that we're going to have a discussion with Mr. Patrick Odier, who is the chairman of Building Bridges Foundation of Switzerland. Good afternoon.
Good afternoon.
With a worldwide experience in finance and sustainability. Mr. Odier, given the recent drive towards competitiveness in the global markets, how do you see the role of sustainable finance evolving? Can that be a competitive advantage rather than a cost?
Well, first of all, thank you very much for including this discussion, which is a discussion on sustainable finance role into the growth pillar of this Delphi forum. I think this is exactly what it has to be done about sustainable finance, because we are talking first and foremost of trying to find ways to mobilize or to unlock private and public funding for transformation of our global economic system, which has become needed. It's not a question of ideology, it's a question of facts, constraints, and economics at the end. And that's why the good news is that while there may be contrary winds or headwinds at this time on these issues, the transition by most corporate actors is ongoing. And the role of the financial sector is to make sure that it translates this transition into the right and sound risk-adjusted investment decisions. And that's why sustainable finance is probably one of the biggest levers of this transition. It has to be encouraged.
What structural change do you believe that are necessary at the policy or institution level in order to ensure that sustainable finance is not sidelined in the name of short-term economic competitiveness?
Sustainability in its own definition contains the idea and the notion of a long-time horizon. So I think the first message is we have to understand that while international conventions, conferences, and standards such as the ones of the Paris Agreement are by definition long-term metrics, in between today and the dates that have been set to achieve those metrics, there's going to be volatility. And one of the wrong assumptions that is often made about sustainability is that's going to be a linear trend. This is quite human as a reaction. But we have to get used to this idea that there will be circumstances, and we're living now such circumstances, in particular because of some of the headwinds coming from ideological positioning of a very big actor in this respect.
In terms of political situation regarding the US policy, the new foreign policy of Trump administration.
Yes, it's a politicization of this idea of sustainability, which should not be politicized because it has nothing to do with policy. It has to do with the limits of our planetary system that are being reached, and that makes our growth model to be corrected in a way that does not contradict growth but decouples growth from its damages or its damaging model that we've had perhaps until here. That means, and that's perhaps also a good news, that sustainable growth is a fantastic universe to be developed, both from an industrial point of view and from a financial point of view. As a matter of fact, I've been a banker all my life, and I've never seen such an interesting universe to be open yet today for decision-making with regard to whom should we lend or to whom should we invest part of our capital. And this is because, again, this transformation is not a matter of policies. The policies that you're referring to today are policies that will have a damaging effects on image and on incentives. But in the reality, everybody knows that those who make the change and will achieve the changes are those who are in command of the industrial processes in particular. And we know that in the US, many of the actors are already engaged for long into this transformation, not to please anyone, but just to make sure that it meets its responsibility with regard to its stakeholders, i.e. it remains profitable and economically viable.
So has President Trump has focused on the sustainability, or his priorities are in a different way than we were expecting?
Yes, I think, you know, what is really a pity about this message that is being sent, mind you, it has been sent already last time President Trump was in the office. What is the most damaging, in my view, if there's something to be damaging there, is the signaling effect that it gives to some of the countries, perhaps, some of the policymakers for sure, and some of the economic actors that will not be in a position today to continue without some help and some additional resources to do that transition. That would be a good excuse now to withdraw. And we see this, for instance, in the financial sector, where many things are being written about big financial groups withdrawing from alliances, which is true, but this is simply because from a legal point of view, they may be attacked for cartel and other types of reason in their own jurisdiction, but which does not mean that beyond the agreement or the alliances they're withdrawing from, they're not continuing to do their efforts to facilitate or to engage in that transformation. Actually, it's for most of the cases, if you read the second line of the title of the announcement, it is, we are withdrawing for this and this reason, but our efforts will continue to allocate and emphasize sustainable investments in our policies.
Right. You have been the driving force behind the Building Bridges initiative in Geneva. Could you please explain us what the Bringing Bridges is to the Greek audience?
Yes, like what you're trying to do here by bringing all actors to speak to each other. In 2019, we in Geneva just noticed that within 15 minutes of a walk, we could meet 40 of the most important organizations, international standard setters that there are in the world in matters such as sustainability. But nevertheless, they were not talking to each other. Worse than that, they were not talking to the public sector, and it has become clear that public funding alone will be far from being able to reach the objectives of funding and of financing that we now need in order to achieve this transition. That means that the public sector has to play a role. And who is the public sector? First and foremost, the industry. We're talking investment by the industries in the transformation of their economic or business model. We're talking about savers or savings in general, transforming some of the savings into more sustainable types of investment schemes. And we're talking also about the lenders trying to allocate lending money in a way that makes better sense from a risk-adjusted point of view, including physical and other types of sustainability risk in their decisions. So this idea of talking to each other became clear in a context like the Geneva context, and we started, quite with humility to try to bring everybody around the table. It was first a summit with a key number of voices that were really representative of what was going on, and it has become last year an event, a summit plus a week of events, 60 or 70 events during the week, plus a summit that attracted close to 3,000 people around the table.
I would like to stay more on that and to ask you what inspired you to connect the financial sector with the Sustainable Development Agenda, and what progress have you seen so far?
I think one of the inspiration is the difficulty to find the right language to speak about sustainability. The immediate reflex is to talk about ideological positioning. Ideological or political positioning has nothing to do with what we have to achieve now. What we have now to achieve is to take stock of the fact that we are in an economic transition that is necessary because facts and sciences show that if we don't change our models, we will self-destroy most of what our economic model is based. Take nature, for instance, good example for a country like Greece, for instance, as well. Nature is fantastic sources, not only investment, but fantastic sources of production processes that is completely underpriced today. And if it were priced, as I used to say, and it's not coming from me, the bees that you see flying in your country, they don't send you invoices for what they produce, right?
So you think Greece is a very nice place to invest, right? Greece is a very nice place for investments.
So there is a necessity to sort of get away from the notion that there are a number of resources that are critical to this economy that have no value. And embedding some of these assets, such as nature, but perhaps others as well, think about negative values like carbon, will probably lead first and foremost to a change of behavior of our economy in general. And this is what we need. If every single company in this world were to price carbon emissions at the right price, you can be sure that the total emissions that is being produced this year will be decreasing fast. If some countries, as some are starting, think of Australian and other companies, to price their detention of land or the detention of forest into their balance sheet and or P&L results, you can be sure that there will be less destruction of what is today so important in order to make sure we mitigate climate issues, for instance. And I think this has nothing to do, again, with political and or ideological views. It simply has to do with sound economics. Reducing the cost tomorrow is the responsibility of the economy today. And by integrating some of these sustainability criteria, having the right metrics, methodologies, etc., provided we have the right public policies, we will contribute to that much faster than if we don't.
How do you see the role of private finance evolving in accelerating the transition to a more sustainable and inclusive global economy?
I think private funds will play different roles at different places. If you take the generally admitted private finance type of universe, which is basically the private savings and or the pension funds monies, I think in this respect it will be very important, but it will not be sufficient. It will be important in innovative investment solutions that will perhaps in certain asset classes take private assets, private equities and or private debt will be very useful in order to realize some projects that otherwise would not be realizable. Why is there appetite and potential there? Simply because usually these projects have to do with new infrastructure in energy, in health, in environmental issues. And I think if we do see a trend towards private assets and debt in general, it's because it's predictable. It's because we know that investing in those schemes will help. That's where private money will be useful. But private money will not be useful enough to cater for the unlocking capital that is needed to tackle the global issue of sustainability, which makes certain countries in the world today, the new frontier countries in particular, suffer more than they should, by the way, because they are not at the origin of the damages caused, and then have to be helped in trying to alleviate some of the damages created by the climate changes in particular, but also to help them, for instance, by developing interesting ideas and solutions, investable solutions, in valorizing their nature.
Mm-hmm. What are some of the biggest challenges or resistance points that you encounter when trying to align traditional finance with impact-driven investment strategies?
I think one additional confusion that I think we should eliminate is the fact that we need to talk about a film and not about a picture, i.e. a photography. If you take the simple notion of ESG, which is used all over the world today, we are much beyond this notion of taking a picture of how a company is behaving. It is not how a company is behaving. Of course, it's important. But what is more important is how a company or an industry is what this industry is doing. And you take, for instance, the example I was using in a discussion this morning of the oil industry, where some of the biggest oil players may be qualified as staying at or being at the top of the quality of ESG companies, simply because they have very good internal policies with regard to equality, with regard to education, with regard to protecting environment, etc. But at the same time, they're producing very damaging types of products, such as oil, plastic, and others. And I think if this is true, we have to move from this idea of ESG to an idea of business model and transition. Where is the company today? Where is it possibly going for tomorrow? And is this actor going to be playing a key role in transforming its industry or not? And if it is, then it should be in a position to get more lending money and more investment money. That's the role of the private sector, to sort of identify that. So what is very important is that there's enough information that is being provided for the right reasons at the right time for decisions in the financial sector to be made properly. And that leads me to one comment that is, I think, important and has to be transformed, is the way we require companies to publish information on sustainability-related issues, which today has gone much too far. Why should we force companies, big and small ones, to publish 1,200 data points where you just need 25 to 30 to know about 80% of the reasons why they are or they're not reaching the Paris Agreement objectives, for instance. And that's what's happening now in Europe, where you have this interesting situation with what they call the Omnibus project, which is intending to reduce the complexity of regulation, which should be pleasing everyone and doesn't. It doesn't necessarily please the big ones, because the big ones are already ready and they have already prepared themselves for doing it. And of course, it's still much too heavy for the smaller ones. So the challenge that we have to address now is how to get that balance between, the necessary regulations in terms of publication. Why? Because information is critical for the decision. And of course, the bureaucratic and cost issues that this creates for the small, mid, and large-sized companies. But mind you, I think that whatever we decide in this respect should go in the direction of asking for better information, but less number of information, but not making the mistake thinking that the smaller companies will avoid it. Because the big multinationals will all depend on smaller companies in order to achieve their value chain processes. And if asked to publish, the bigger ones will ask the smaller ones also to give the information. So we have to be prepared. This is probably the biggest paradigm change that there will be for us all in the economy. That is, to be obliged to live with a quasi-total transparency of our value chain.
So you mentioned challenges. You mentioned that we have to be prepared. So looking ahead, what do you believe is the most urgent step needed, either from policymakers, financial institutions, or global frameworks, to bridge the gap between capital and real impact on the ground?
If you take the global picture, i.e. what is often qualified as the global north versus global south, or east-west, I think what is needed is really an international financial system that will include in its mission the sustainability-driven types of objective, and not only work on the basis of the traditional poverty-fighting types of objectives, including sustainability goals into the multilateral and multinational financial institutions will simply mean to look at the sources of tomorrow's potential poverty and try to eliminate them. That's one. The second is to ensure that the local multilateral development agencies, i.e. the banks of the international banks, locally will play their role to ensure liquidity. The third is to ensure that the risk parameters will be managed properly, i.e. that private capital can count on risk mitigation locally that can make the cost of capital the same as it should be in other parts of the world. That's for the global south and north. For us all here, I think what needs to be achieved is a narrative that explains simply why it makes huge sense to integrate sustainability decisions in your savings. And by good examples, such as company disappearing simply because a government or a region suddenly says that an industry is not grata anymore, will probably serve the purpose. The reactions of the financial markets to savings today that we are not invested in the right transitioning models is much faster than it was 10 years ago, and could create huge stranded asset risks that, of course, we should avoid for most of the savers and future pensionees.
You gave us the global framework, and I was wondering, my last question that will be, if the European Union, who is facing so many challenges with US now, a new government, is the European Union fulfilling all the requirements that you said in order to be sustainable and financially capable to overcome the difficulties?
Well, perhaps here a word of optimism in a world of pessimism. I think that the sustainability transition is ongoing. It has been decided. It has even been funded.
And it will never end. The
world.
transition will never end.
And it will not end because it has started within the private sector itself. It cannot be stopped by any policy at this stage. It just cannot be stopped. So it means simply that additional funding and programs such as the one that have been now launched in different parts of the world. I'm thinking of course, the previous administration's program, IRA in the US, but I'm also thinking about the Green Deal in Europe, can make a huge difference. Actually, economic actors, even in the difficult geopolitical situations, have many, many new opportunities for investments that could simply lead to a leadership in Europe that is not yet achieved in other industries. So I think there's a quantum leap here to be achieved that is probably quite optimistic.
Thank you very much, Mr. Odier, for this interesting conversation. Thank you so much. Thank you for your attention. Thank you.